let's go ahead and get started. I'm sure that we'll have a few more people join us, but just for time's sake, I'd like to thank you all so much for joining. We're excited for you to join this presentation where we will be discussing financial wellness during Financial Wellness Month, January. My name is Mariah Thompson. I'm a case manager and counselor at the Student Health and Wellness Center at Charles Drew University. In case you aren't familiar with Wescom, they were founded in 1934 and provide services ranging from checkings and savings accounts, credit cards, student loans, financial counseling, and education. And today you will learn about budgeting and saving. Before we get started, I'd like to remind students that you have the opportunity to win one of two $100 gift cards that Wescom so generously provided for you today. Thank you, Wescom, for your generosity. The winner will be pronounced or will be notified by email and announced on Instagram today. And I would like to introduce our wonderful presenter before they take it away. David Jabensky is the Vice President of Wescom is the Vice President of Wealth Management at Wescom Credit Union. David has spent the last 2 decades of his career in the investment, insurance, and program management aspects of the financial services industry, working for several prominent banks and global organizations. Mr. Jabensky has numerous licenses that inform his expertise and commitment to his clients, and is passionate about educating investors and achieving financial success through awareness, communication, and education. So, David, please take it away.
Okay, thank you so much, Mariah. Thank you for that great introduction. Hopefully everyone can hear me okay and my audio is coming through clearly. Wonderful. Okay, let's get to our presentation. So let me go ahead and do a screen share here. Give me just a second. Okay, so hopefully everyone can see the screen correctly. It is in presentation mode, and I'm good for a thumbs up, just audio-wise. Okay, wonderful. Well, thank you so much, Brian. We deeply appreciate the time. Thank you for spending a good part of your day with us and maybe even your lunchtime. Again, I'm David Jabzinski, Vice President of Wealth Management here at the Credit Union. And, we're so glad to be here because we do a lot in the community. As part of who we are, our DNA as an organization it's all about doing financial literacy training, giving back to the community, and just being out there for organizations that are in the same area that we of course have our footprint, which is in Los Angeles, Orange County, and then inland. So we're going to talk a little bit about budgeting. Now, you may be asking, okay, well, and by the way, feel free to ask questions during the presentation because there is a couple of things I would like to get some interaction on a couple of the slides. But you'll probably see my name up there. Feel free to call me DJ. A lot of folks know me as DJ. It's much, much easier. And so, this topic is near and dear to my heart because I have a 20-year-old at home. I do have 5 children. My youngest is 20. And so, I have these conversations with him a lot. But what's interesting, sometimes the conversations don't go exactly as you want them to, right? But for the most part, having these discussions, I think, is so important because it's so vital just to, from a budgeting standpoint, and just getting off to a good, healthy start as you pursue your career and working through school and up and onward to the next goal that you have in life. So let's talk about budgeting and what we're going to discuss today. Now, you can see this slide. It's got a couple of things that we're going to explore. We're going to talk about budgeting. I know that may not sound exciting, but there is, I think, some good nuggets of information that we're going to discuss. And then we're also going to talk about examining wants and needs, the different things that come up every single day that we want in our life, right? I'm fall victim to this all the time too. There's certain things that come out for me. My Achilles heel is anytime a new iPhone comes out, I have to have the latest iPhone. And guess what? My son starts to say the same thing to me. I'm like, okay, well, that's maybe not the best precedent that I've set, but it is just understanding the different wants and needs and how to decipher between those two and make that right decision. We're also going to talk about setting goals as far as spending and savings, and of course, debt repayment. There's a couple of topics that we're also going to touch on. So I'll just give you a couple of high level words and terms. You may have heard them before, but we're going to talk about the avalanche method to repaying debt. We're going to talk about the snowball method, and then we're going to talk about this 50-30-20 rule. So I thought I'd kind of put that out there right up front. Okay. All right. And by the way, I don't think we'll have time to get to it, but just knowing the world that I sit in, which is in wealth management, that is a space that we also take care of. So once from a budgeting standpoint, things look great, the next step, which we have a slide on of investing and saving, is so, so vital. So let's get into the slides. To me, the best way to understand a concept is to have a real life example, or at least the closest we can get to a real life scenario. So here's what we're going to do. We're going to start with a scenario here, and we're going to use this scenario throughout the rest of the slides. I think that will be good context for us to just get a good idea of what we're referring to, but put pen to paper and show some real numbers. And as I said, if there's any way to get a little participation, that would be great. Even in the chat box, that's awesome. Okay, so we're going to look at an individual, and we're going to meet Marta. So this is someone 40 years old, and they do have a couple of different jobs right now, but they definitely feel overwhelmed with debt. And this is very, very common. At the credit union, we have what is called a membership. So when people come in, they become members of the credit union. But Martha's situation is very, very common to a lot of people we work with, and it's okay. Um, you know, a lot of us have not grown up in the financial services world our whole life, and we get some of the benefits to understand what exists out there. So it's very, very important that we commit and help our communities and our members with some of these areas. So one of the things that she's feeling overwhelmed is she has a lot of bills. There's some things that are past due. And then she also is not very organized. And so she wants to become financially stable. So let's take a closer look at this scenario, and then we can have some interaction on it. So, all right. So Martha has a couple of jobs, and she's making about $2,000 per month in what is called net income. And we'll talk about that in just a second, between the difference between gross income and net income. But here's the thing. She feels like she can't make her money last through the end of the month. So let me ask you this. What do you think of these selections here? A, B, C, D, E. Which one of these do you think would be a good idea for Marta at this point? Would it be A? Would it be B, C, D, E, or could it be all of them? So go ahead and just put your answer in the chat box if you wouldn't mind. Perfect. I see some A, some B. Absolutely. Those are vital. The priority. I like that. Yes. A and B. Perfect. Well, it's interesting. Oh, indeed, absolutely. Live within your means. And it's so, so true. And that can be very challenging, right? We're all trying to make that dollar stretch as far as we can. And what's interesting, one of the things that we work with a lot with our members right now is something that is affecting all of us, and that's called inflation. That is the cost of living, right? So we all are trying to live within our means, but it can be challenging, right? Going to the store, I mean, just filling up our car, all these things. Now, what is actually the answer? Well, here's the thing. It technically could be all of these. It's a little bit of everything, but yes, if you're going to start, just starting with a budget, it's absolutely a great start. But then also keeping in mind, just living within your means, I think is very important. So let's break this down. So I want you to consider and keep thinking about the $2,000 that she gets on a monthly basis, and some of these things that she has that she's feeling overwhelmed with. Okay, so let's first break down her income, because I think this is important. All right. So one of the things to understand first is how much money is she actually making on a monthly basis? Now, there's two different concepts to think about. Now, first, before we create a budget, we need to understand how much money is actually coming in. So there's two ways to look at this, gross or net. So what's gross? Very, very plain, straightforward definition of gross income is we're going to just take all the money that you're making within the month. And before we take any deductions for taxes, that's going to be your gross amount. So gross income is important to understand. But what's interesting is we're looking at the prior slide. I'll just quickly go to it. She is actually making net income of 2,000 per month. So what does that mean? Well, she's earning more than 2,000 a month, but what's happening is she has to pay tax on that money. So once she gets her paycheck, she's of course going to pay some federal tax, some state tax, because all of us, no matter if we're working part-time or full-time, there's different taxes called payroll taxes that unfortunately we all have to pay. And that goes to help run our government. It goes to help run different services within, the counties we work in, within the cities we work in. So again, her net amount that she's actually receiving at this point is 2,000. So now that we know the income that's coming in, and this is always important for us to do the same calculation, is how do we set up the next step? Well, now that we know how much is coming in from a net standpoint, let's create the budget or at least start that process. So, budgeting, what are we really trying to do? It's just we're creating a plan for how we're going to spend money. That's what we're going to do. So, okay, can a budget help me? Absolutely. A couple of you said, it's important to make sure to live within your means, pay down debt, and then also, of course, save for future emergencies. I mean, that all sounds great. That's part of a budget. It's sometimes hard to do. I know when you put pen to paper and you actually do it, it can be quite overwhelming too. And clearly, we're going to walk through an example of Barta, and we're going to see exactly what her budget looks like. And then I'm going to ask each of you to come up with some different ideas and solutions on how we can help Marta. So, knowing that we have to start with a budget, let's start with that. Now, a good way to think about a budget is I want you to think about wants and needs. Okay. So, and this will be another exercise that we'll actually do here. And my apologies, I got out of the presentation mode. Let's go ahead and do this. Let's just take a look at the slide here. And would we say that, let's just go through a few of them. Is coffee a want or a need? Yep, absolutely a want. Now, groceries. What would groceries be? Is that a want or is that a need? Yeah, absolutely. We all need groceries. It's just part of the biggest thing we always talk about when it comes to budgeting is being able to do meal preparation at home and to eat in more. Right. That's another kind of Achilles heel for me. That's always been challenging. Is sometimes I'll be traveling or doing different things. It's so hard to always to do that meal prep, but I'm getting much better at it. But it's something that I even challenged with. I'm challenged with car insurance. So let me ask you this: can we drive in California without car insurance? Is that a want or is that a need? Perfect. Awesome. Let's go down the line here. I'm curious of everyone's response on this. Cell phone. Would we consider that a want or a need? Yeah, it's interesting here. Yeah, I agree. Marcia put in there both. I agree because it's one of those things that a lot of us don't have landlines at home. And I remember growing up, we used to have a landline, and of course now you typically don't. But the cell phone, a lot of folks would say you need that for safety, for security. It's interesting when my son was 14 years old going to school, and he's like, "Dad, I need a cell phone. Guess I need to call you." Well, did he call me? He really didn't. But again, it's so important. It's vital because there is a lot of safety things that come with the cell phone too. So now we could go through this list here, and restaurants again. Restaurants, I think we all would agree that is that's a want. Absolutely. Thank you again. again, if we could meal prep at home and do some of these things, I think it's much better. Let's take a look at how about, I mean, these are probably straightforward too, but what about health insurance and medical expenses? Is that a want or is that a need? Yeah, and this is sometimes the challenge and unfortunate part is, sometimes when we're all on a tight budget and there's only so far we can stretch that dollar, sometimes there's areas that we can't provide. And, someone may say, you know what, I need to either be able to eat or I'm not going to be able to pay some of my insurance. So we do see this from time to time where someone says, you know what, I can't afford to get health insurance because I have these other areas. So yeah, absolutely. Thank you for the feedback. There is that covered California. That's a great point because there is so many other vital services out there that we got to make sure that we're aware of because it is important. Whether it's rent, whether it's utilities, things like that, there is different programs that are out there. So it's always good to look into those. So thanks for the feedback in the chat there. All right, so we know these are wants and needs. Let's take Marta's $2,000 and let's yeah, not having health insurance in California, there is a penalty. Absolutely. It's interesting. When you file your taxes, it will ask you, and of course, they want to make sure you did have coverage, right? And the reason for that is I know when you go into a hospital to get treatment, their first priority is to help you and to treat you and not to look for your insurance card. But these costs do, of course, start to increase. So it is important to have that. All right, so let's look at the next slide here. Okay, so we're going to take Marta's $2,000. Now, this is her net that she gets. And so here's the list that she actually did come up with. So this is as of today what she wrote down. So let's take a look at her wants. So she's saying coffee, restaurants, entertainment, clothing, salon. So there's about $330 on a monthly basis from a want standpoint that totals up. Now let's take a look at the other sides, the needs side. So we have rent, groceries, utilities, car payments, transportation, healthcare, and internet. Now that comes up to 1485. So a lot of things on here. You can see the expenses. But again, she's got 2000 a month. So this is where it comes in. So here's what I want to ask the group here. So take a look at this. And what I'd like you to do is think of a couple of things right off the top of your head that you think she could cut in this example here. Think about something she could cut. Is there anything she could reduce? Any other ideas for um, maybe transportation? Okay. Copy, restaurant, clothing. Okay, perfect. Yeah, mass transit. I know that can be somewhat challenging in certain parts of California, depending on where you live, but totally agree. Yeah. Okay, Darren, all of it. Absolutely. What's interesting is how can we help her free up funds? Absolutely. A lot of things. I mean, cutting expenses, reducing spending, she could price shop for services. I know we've all probably used Amazon services, which is great, and there's probably a lot of convenience, and maybe there's even some great prices on there. But then there's other things that may not be that case, and so just price shopping out there, I think, is very important. Think about a new job. I know she's got a couple of things that she's doing right now for employment. And that, number four is real interesting. And I'll just kind of touch on this for just a second. Actually, four and five, we are in a economy right now where the unemployment rate is at historical lows. In fact, there's more positions out there right now than there is workers. And I think that's for a couple of reasons. Number one is the economy has expanded. I think as it says here, gig work and freelance, social media, side hustles, all these things have expanded the workforce. So There is some good opportunity right now if someone is looking at actually trying to get into a new position. I'll kind of share with you today. My wife starts a new position after 8 years of being in childcare. She said, "You know what? I'm going to start a new position," and she wanted to do something totally different and move to healthcare. So she is now in patient services. Today is day one for her. So, and it was interesting. She put her resume out there, and she got three immediate hits from other organizations that were just very attracted to her resume and said, "You know what, we want to talk to you." So I think 4 and 5 could be a big game changer for all of us, no matter where you are in your budget. So okay, so we looked at that. Let's now go to the next thing, and also entertainment. Absolutely, that's probably the thing that can be challenging, right? Because we all work hard, we go to school, we do all these things, and it's like, hey, you know what? I just need time to relax, some me time, right? That may be going to your favorite gym. It could be going to Starbucks. It also could be saying, you know what? I just want to do Netflix, and I just want to watch all my shows, right? But again, I think just taking all these into account so it's not overwhelming is the right methodology. So let's go to the next step. So one of the things about this whole budgeting process is, okay, you take your income, you take your net amount, how much you're getting after tax, you come up with this budget, you separate it between wants and needs. But something else that's really important is to take a look at what debt that there may be. So I'm just going to show you this one more time. So you can see here she's got some different things she's making some payments on. So that's fine. But we all know this, that we may have a credit card, may have more than one credit card. We may be in a situation where we have a student loan. So how should Marta tackle this? And this is where we're going to get into some other areas because, right now, she's trying to make ends meet. She's trying to get to an end result of having some money left over, but she's got some credit card. Now, take a look at the interest rates. Now, this is important too because you can see some of the different credit cards have different rates. So it could be in Martha's strategy here, it could be just taking that and maybe trying to reduce the interest rate. But we're going to actually talk about two debt management strategies next. And these are really important because we understand that the debt's there. And so, how do we actually tackle it? Because it can be overwhelming. It could be to the point where it's like, you know what, I'm not going to do anything. But we want to make sure that we have a good process for Marta. So let's take a look at these two strategies. Now, I mentioned these at the very beginning of our budgeting call, and we're just going to touch on them again. And here's the thing. What strategy is better than the other? You know what? They're both great. The whole purpose is it's about affirmation that you're doing something towards your goal and to give you that confidence to keep moving down the line to make sure that you're managing these strategies. So let's take a look at both. So the avalanche method, pretty straightforward. So we're going to list all the debts. So we have the debts here for Marta, and we're going to list it from the highest to the lowest interest rate. Well, we can see that credit card A, it's got the highest interest rate. So we know that if Marta carries that balance, they're going to charge an interest on that balance. And so it's important to make sure that we address that. So the avalanche method, what you're doing is this. Very straightforward. You're going to choose the highest interest rate and you're going to pay that off first. So what you're trying to do is not have that interest payment happen. And so you can see she's got a very, very high credit card here. So then in this scenario, an avalanche method, she's going to start with credit card A, then B, then the student loan. But let's look at the other method. I actually like this method. So take a look at this. This is a snowball method. And what you're going to do is do the same thing. List all the debts. And what you're going to do, you're going to list it from the smallest balance to the largest. So we did that both ways here. You can see interest rates are on the far right. Balances are in the middle there. So credit card B would actually be the one with the smallest, and then of course A, and then student loans. So in this method, what you're going to do is you're basically going to take the loan with the smallest balance to pay that off first. So what you're trying to do here is you're trying to get that smaller one paid off so you feel, again, that sense of accomplishment. Both are great methods. I think at the end of the day, the takeaway is here. We just want to have some method for how we're approaching this. I will tell you this, and we won't spend a lot of time on this. There's good debt that's out there, and there's not good debt. Good debt may be something such as a mortgage, or it could be a car, meaning that you need that to get to your destination. It could be that student loan, right? That additional higher education to get you into that dream job that you've wanted. Maybe that next level up from an income standpoint at where you're at. So some bad debt may be financing things such as some entertainment or things that you're not paying off on a monthly basis. So we won't dive into that too much more, but those are some of the things to think about these two debt methods. All right. So now that we've talked about the income that Martha had, we talked about wants and needs. We said, let's go ahead and set that budget. Let's address debt management and a couple of philosophies of how we're going to tackle that. So, what's the next thing? Well, something else that we'd want to do is set some financial goals. And here's what we're trying to do, we just want to set some personal goals of how we're going to save and spend. I appreciated the comments earlier about just save or just make sure you live within your means. I think that's so important. But sometimes life just throws curveballs at us, right? And there's things that we can predict and some things we can't predict. But let's talk a little bit about some of these things here. So maybe give me some examples. So let's talk about short term, medium term, and long term goal. Can some of you give me an example of a short term goal? So let's say there's something that, again, maybe a few months away, it could be less than a year or two away. Give me an example of a short term goal of a financial goal that you may want to accomplish. And I'll give you a quick example. Maybe, and again, I know we're talking about entertainment, and we brought that up, but maybe there is a trip that you're wanting to go on, right? Or saving for a rainy day. Absolutely. Having that short-term account or that short-term financial goal is very important because a lot of times, there you go, save 1,000 towards an emergency fund. I think that's great. The more you have these short, medium, and long-term goals kind of mapped out, it's easier then to actually decide how much should go in there and then what type of account that should be. Let's say you were doing your banking with Wescom Credit Union, you would say, okay, I know what my short-term goals are, so then I can find accounts that kind of line up to that. So let's talk about a medium-term goal. What would that medium-term financial goal be? And I have a few examples, but maybe someone could give me an example of a goal that you're trying to accomplish that you know that you're going to have to save or spend some money towards that goal. Yeah, absolutely. Brianna, great. Saving for a down payment of a home, invest it. Oh, I love it. Darren, near and dear to my heart from the investment world, investing in the S&P 500, love it. Paying off a student loan, absolutely. Those are all great goals. And then, of course, the education that all of you are receiving from the amazing university that you're at. So I think that's another great medium-term goal. Now, long-term goal, interesting, longer than 5 years. And you could actually take a few of the things that you mentioned and put them in that category, but maybe some other examples of some longer term financial goals longer than 5 years. Bingo. Yeah, 100% saving for retirement. Absolutely. And it's interesting. I applaud all of you for saying this. That is amazing. I'm still trying to get my 20-year-old to even think about retirement. It's still not on his radar screen. Now he is saving. He's starting to do investing. I'm so happy about that. But I'm trying to get him to think about retirement. And he keeps telling me, Dad, if I put the money away now, what if I need it? Um, but I guess the first thing is, oh, I love it. Thinking big, buying commercial and or rental property. Awesome. Absolutely. It's interesting, and we won't touch on this in our segment together today, but even saving for retirement, and let's say that first job that you land and they have that retirement plan, you absolutely have some benefits by saving for retirement. There is some ways that you can access those funds earlier, such as your purchase of a first home and other things. But again, at the end of the day, just having that goal in mind and funding towards it, I think is so, so important. So great feedback. All right. So what do we do from here? So we're setting financial goals. Um, and again, we won't go through those. I know we just did that. But let's talk a little bit about this budget. So I know we talked about all the different wants and needs that Marta had. So we listed those out, and so we're going to spend a little time on that now, and we're going to go back to that budget because what I want to do is I want to introduce a couple of budgeting methodologies. Okay, so we're going to look at two of them. One is 50-30-20 and the other is the categories method. Now, we're going to go through both of these, and then what we're going to do is we're going to go back to Marta's situation, and then I'm going to look for feedback. Okay. So 50-30-20 and the categorize method. Let's just get into the first one. So, what are we talking about here? Well, let's look at that $2,000. So, think of the 2,000 that we were discussing at the beginning that Marta has, and again, that's her net. So that's the amount she gets direct deposited into her account every single month, or maybe she's paid twice a month. And by the way, a side note for all of you on the call here, you're probably with a current financial institution, but here's what I would just ask of each one of you. If you have a part time position someplace and you have some sort of direct deposit coming in, find out when your direct deposit hits. When you work with Wescom, we have the ability to get paychecks in earlier, typically up to 2 days earlier than your direct deposit. So just think about that. Again, what we're trying to do as an organization is empower our members and help them through this financial journey. So that's very important because if you're going to provide me my paycheck on Wednesday night versus Friday morning, you definitely have my attention. So let's think about Marta here. She's got $2,000 per month. Okay. So what this is saying is she really shouldn't spend more than half of her income on needs. It's saying that 30%, no more, should be on her wants, and that at least 20% of that should go to debt repayment. Okay. So if we look at that, let's just take the $2,000. So what it's saying is, so 1,000 should be needs. It's saying what $600, of course, is saying wants, and then, of course the remainder would be about 400 for debt. So let's go back to her budget and take a look at this. So now, if we take a look at this, this is what this should look like. So as you can see here, what she's done, and you remember the first slide, you remember the wants and the needs. But what we did here is Marta said, okay, I'm going to take this 50-30-20 methodology and I'm going to apply it to my $2,000. So you can see some of these categories moved around a little bit. I think coffee was $50. We're at 20. So some of the things moved around, and that is so, so important because now she is definitely more aligned to what this budget should look like. And so great job on her point and her side. Now, the other thing too is the thing that pops out at me, and to Darren's point that he said a couple of times, saving and buying a commercial property or rental or investing, you know what? Look, she's got this $100 that's going to start coming in, and that is good. That's going to empower her because at the end of the month, she's going to start to see that accumulate as well as these other areas. Very difficult to stay within a budget. I get it. It's hard for all of us. So we get that. Here's some, like I said, these rules of 50-30-20. They may work and they may apply to your situation. Let's look at another area. So I said there's another methodology, and it's called the categories method. And really what we're doing here is we're just breaking down the information. And what we're trying to do is just put it in percentages and categories. So So here's an example. You can see here. So housing, utilities, grocery, savings, dining out, entertainment. So it's just more of a detailed breakdown of a budget. That's really what we're trying to do here. So when you go through this, and then we can look at her expenses again. Again, it's another way to kind of look at this. All we're trying to do is get to an end result of budgeting, kind of living within those means, and then taking and saving additionally more. And I got to tell you, it can be very, very challenging out there. We live in California, one of the, I think, most amazing places to live. The weather is beautiful. We get to experience a lot of different things. It's an amazing place to live. The other side of it is very expensive, right? Purchasing a home, buying a car. I mean, college expense is just unbelievably expensive. So I get that. And so this is what we're trying to, we're just trying to get to some sort of way that we can stretch that dollar. So now that we're kind of in this position of Martha saving some money, you can see that she has $100 saved, which is awesome. So now, what does she do with the savings? Well, here's the cool thing. This is where she can start that savings. It may go into a account with Wescom. It could be in a savings account, a checking account. Uh, Darren brought it up. She could actually start an automatic savings plan where once she gets enough money in that emergency fund, she may say, hey, I now have some money to actually set aside for my retirement. And then, of course, limit spending. I mean, these are all very, very difficult to do, but once you do them and you get into an automatic process, it is much, much easier. So, one of the takeaways before we get to the final slide that I would say is a great way to go through and to make sure from a budgeting standpoint things look good and you're on track. And this is even something, I mean, I do it, I ask my wife to do it. It can be challenging to do it, but it'll take some time, but go through it. Is through the years, we may have all signed up for automatic programs of debiting our accounts. It could be to a local gym, it could be to it could be to, let's say, Apple Music. It could be to Netflix. It could be to a lot of different places that set up what is called these automatic payments. Now, that's all well and good, and it's a great way to kind of manage from a budget standpoint. But look through and say, am I actually using those services? So that's a great place to start. It may be just be looking at your credit card, looking at your checking, your savings, and saying, you know what? They have my information. I want to stop having that automatic debit come from my account. So very, very important strategy as you go forward is just to make sure these automatic debits don't add up. And then at the end of the month, you find that you didn't authorize them, but they're still coming out of your account. And just work with your financial institution. A lot of times, what we can do is easily place a hold or a stop on that. A lot of times, we don't have a fee to charge that. And then it's a way to make sure that they cannot debit your account any longer. Or you may have gone down and said, you know what, I tried to unenroll from this gym. They won't allow me, or they're not letting me. So, again, just keep that in mind. It's a way that we're on your side and we can help process that for you. Okay, we talked about a lot. This is really the final slide. And it's just, first of all, thank you for spending your time and your afternoon here with us. And I know we went about 30 minutes or so, but a couple things to remember is, there's so many ways from a budgeting perspective to get started. Most important thing is just to make sure, manage your spending, your savings, and your debt repayment. Have some sort of approach. Now, we talked about a couple of approaches: avalanche, snowball. You may have heard of other approaches to this whole process. I think it's just having an approach. I think that's very, very important. I think the third one is extremely valuable. And, it's just to talk to someone you trust. It could be a family member, it could be a friend, a financial advisor, someone that is just additional support member. I'll tell you this with my son and how when he was growing up, a lot of times, what's interesting, as parents, we try to give advice to our kids. And I know it's sometimes challenging. And I get it. My son sometimes doesn't want to hear from me. But a lot of times, it's interesting. My kid played soccer and sports growing up. And a lot of times I'd have conversations with his soccer coach, and his soccer coach would be the one providing great advice to the kids and saying, hey, here's what you need to do. Here's what you need to focus on. So even if it's not a parent that's out there, just know that there's a lot of great individuals out there. Your Wescom team here, we're here to help. We're here to provide support, guidance, direction. So, on that note, I guess we could open it up for questions or any comments, whether it's on the material we covered or it may be on something as it relates to anything in the investment world. Well, I deeply appreciate the feedback and the comments in the chat box. If
Can
there's
you repeat the
anything I can
question?
comment
I'm
on,
sorry.
yeah,
You kind
Darren, go
of cut
ahead.
out on my end. Can you just repeat the question?
Yeah, just wanted to see what questions you may have, whether it's on material that we covered or even just anything in general. It could be investing. Again, that's one of the areas that I spend a majority of my time in. But again, this is all important because this leads up to that conversation. Because once you have your financial house in order in these areas, it's very, very easy to start your journey, whether it's first time investing or retirement.
Yeah, I have a question. Is there any like stocks that we should be on the lookout if we have like an extra $2,000 to kind of like either to begin investing in, or kind of I always say like Apple, S&P 500, which always seem to be like good stocks because they're as of right now are very consistent and they give good dividends for the long run. But are there any other like stocks that in particular, or that we should be like do some more research on to kind of like see whether or not we should add it to our portfolio?
Yeah, that's a great question. And I got to be careful with that question that I'm not providing any financial advice or stock advice, but I think a couple things stand out, Darren, to your question. Number one is absolutely if you have your budget in order and there's that additional funds that you can get started, would highly recommend that. Now, the nice thing is, even if you said, you know what, I can only start with $50 a month, absolutely there's some great programs out there now. Clearly there's a lot of different solutions out there. There's a lot of different platforms, as we call it, that you can use to begin your journey. So for an example, there's a lot of electronic um, I guess call it platforms out there where you can start investing from day one and you can add $50. Now, what I'll do is I'll just kind of give you kind of a 10,000 foot level. I think the most important thing is to just start that journey. Darren, you may have put the comment in the chat box too, I believe, is, the S&P 500. The S&P 500 is basically representative of our top 500 companies within the United States. Now, these are amazing organizations that basically, whether it's technology, whether it's infrastructure, whether it's IA, all these different things that they focus on. If you historically go back and look at the return of the S&P 500 over time, you will see from a historical standpoint over time, even if we looked at 20 or 30 years, you will see a tremendous amount of return in your account. In fact, outside of potentially real estate, it is one of the top performing assets over that period of time. Now, don't get me wrong, there's other things that are have been very popular recently to do, but over time, you want to make sure that you're consistent in what you do. And if you're looking for a great diversified way to invest, that is a great way to begin. It's a nice way. You're owning 500 companies. There's a lot of different mutual funds and what we call ETFs that are out there that you can access at little to no cost and start your investment journey. I think once you begin that investment journey with something that's very broad, it's diversified, then I think you can look at other things such as an individual stock or a couple of individual companies. You just want to make sure that you do your homework, as Darren said, do your research. So important because things change daily. The market changes daily. And a lot of times we don't have time to just focus and research all these companies. So invest with someone that's out there that you have confidence and trust in. And I would say that's a good place to start. But just know that you can start with $50 a month and just start on that journey.
Thank you.
Yeah, Darren, thanks for the question.
And we have a question in the chat also. Could you provide a reason as to why, when one pays their statement balance in full, that many times their credit score drops?
Okay, yeah. Well, this is an interesting question because a couple of things. Now, and again, there is, I guess, a strategy to do this. Some folks will pay in increments and they'll pay at certain times before their actual statement does cut. But typically, to this specific question, a lot of times what they'll see is, okay, the balance is paid off. It now opens up that complete credit line again for you to utilize, right? So again, a lot of people do this from a point standpoint, right? There's a lot of individuals, I know our household does that, where we'll go out, we'll go to Costco or something, we'll try to use the points by spending on the card and then pay that off. But you're right, that could be a factor where it does drop because of the fact that now you can utilize that debt. So I don't know if there's any more specifics. Maybe you've experienced that individual that listed the question down, but that can happen. And what they typically when they're looking at your credit is they're looking at your credit lines, but they're also looking at what is called utilization, and how much are you using of your credit line. So I think it's one of those things that if you're paying it off and that way to avoid the interest charges, that's great. But you bring up a good point, which is this credit scores. And I know we don't have a lot of time left, but I would highly, highly recommend everyone to get your credit report. You can go online. There's several places that you can get a free credit report. That's one of the things that um, the administration, our presidential administration, has provided, that you get access to your credit report. And there's nothing wrong with pulling that. When you pull it, you'll actually take a look at what's out there, what's on there, what's not on there, maybe something that's missing or something that's on there from another individual that should not be on there. And there is a dispute process that you can go through. But there is an annual credit report that you can get on a free basis. So I'd highly recommend to do that.